Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So today is again the time for a weekly report on euro currency. The trading process of this week mostly was turning around the non-farm payrolls release. We've got numbers on Friday as usual. So the bearish effect was a bit not as strong as it was suggested by few missings in this report. So as you know, the unemployment rate has increased slightly and average hourly earnings were a bit lower than expected. So wage inflation was a bit lower. So that has led to some relief on Friday, although the first reaction was positive. But you can see later on Friday it was a bit some minor reversal, minor pullback started. But in general, today we have come to the conclusion that inflation still stands in focus currently on the markets. And recent relief that we've got on Friday probably will be temporal, because the overall mood of the report is very positive. Actually, it provides the perfect report, since it shows increasing of the numbers, but at the same time it shows not a strong inflation. So it doesn't force the Fed to adjust another time the possible Fed policy, so escape it from speculation on this subject again. And that's perfect for the markets. Markets would like to see clarity and on the way to the Fed policy and report that they got, that's just absolutely they would like to get. So totally certain report, everything stands according to your expectation. That is really great for the markets. So in a longer term perspective, guys, we still have the same concerns. So we still think that market could show even some bullish trends in the in the coming 18 months until the first Fed change will happen. Probably these bull trends will be short term, but currently it's a question what the factors could trigger these trends. So theoretically, market have the time, have the ability to show the upward continuation, but it's unclear of the factors. What factors will trigger this action? How market will use this time for appreciation? That's the question. And currently we do not see yet the answer on this. So we see that the dollar index hasn't reached the major target, as we discussed a lot of time already on the monthly chart, but we do not understand what the factors could lead markets to make them complete it. So as on the euro currency, it's approximately 128 areas. On the dollar index, it's approximately 87.4 area. But as I said, the drivers are still uncertain, stands uncertain. But we will see probably how the situation will develop. In the shorter term, where mostly will be focused on the action around 118, 120 area on the coming week. This will be a relatively narrow trading range for the coming week. Currently, market turns to the summertime, vacation time, and usually markets become wobbling in decreased activity. So we do not expect a real significant action in the coming couple of months. So probably on the monthly chart, market will keep the same range of the 116, 123 area. So our trading plan mostly stands on the intraday charts. You can see that although on Friday we have some kind of the pullback, we think that will be temporal, and overall picture stands bearish, and we think that within perspective of the few weeks, market is still tending to the 116 level. This is major gravitation point, since this is the ABCD target, this is major confidence support on the weekly, and this is major invalidation point for a bullish context on the monthly and weekly chart on the euro currency. So, and sooner or later, but market probably will reach this level. Overall performance here stands bearish. Fast acceleration on the CDLX suggests that downside action probably should continue after the retracement will happen. So it means that on the coming week we mostly will dealing with this retracement, and we'll be dealing with and considering where we could take the short position. So on the daily chart, you can see we have relatively transparent picture. We have clear, evident level around 1980, 20, even 2010 confidence resistance, and take a look at degrees with the daily overbought. This is just perfect combination to consider taking the short position. I'm not sure that market will be able to climb right here, but if it will happen, that will be definitely the point to consider taking the short position around it. That's what we have on the daily. If somewhere we will get, for instance, bearish grab or some other signs of weakness, maybe even around 1930 area, who knows. And so will be another chance to consider possibly taking the short position. But currently, it seems for a position taken on a daily chart, you could consider any resistance with the stops above this area. So if you trade on a daily basis. A downside target will stand the same, approximately 1650, this ABCD target. And it could be completed within a few weeks, probably. So on the 4-hour time frame chart, we do not have something special. You can see market just has hit predefined minor target that we have mentioned on Friday. It's 118.20 area approximately. It's 127 extension of this area. We have the divergence, and potentially, theoretically, chance exists that market, as I said, could climb right back up to the 120 area. But currently, I still do not see yet the factors that could lead market there. So theoretically, we even could consider this large head and shoulders pattern with later deeper upward direction. But you should know that actually this was already the reaction on the COP target. In appearing big reversal pattern on the 4-hour time frame chart, strong reaction to the COP, especially when you have in general supportive, dollar supportive non-farm release, and when you have the sell-off, strong sell-off on the daily chart, chance to get this pattern are not really significant. That's why we're gravitating to the idea that probably it will be some retracement inside of this swing, and then market could reestablish downward action. So, but we will go step by step. We will first of all take a look at reaction. And the first step of the retracement, how market will develop. If we will get something really thrusting and strong, then of course we will increase the time frame. If it will be gradual and slow, then we will keep the picture that we just started discussing on the 30-minute chart. So we think that right in the beginning of the week we could start with this 30-minute chart. These potential targets that market could hit on the way up in retracement. And potentially there could be a couple of patterns. So first I would like to start with the minor and steep, this ABCD pattern that has been formed on Friday. This OP creates agreement with the 1880 approximately. Is this fib level. XOP of this ABCD pattern creates agreement with the next 1910 area. And to be honest, guys, I think that this level is most probable area where a theoretical market could turn down again. So first we use this level as the first approximation, first target where we intend to consider taking the short position. If overall price action will be gradual and slow, this probably will become the point where market could start downward action. This is first steep ABCD pattern. Alternatively, market could turn to some head and shoulders. But this will be not big difference for us because the ABCD target of these head and shoulders will have the same destination point, around the same 1910. So we have 127 head and shoulders. This ABCD will be right there. So for scalp traders, that will be also opportunities to take the scalp long position, possible pullback. It's also possible. So, and next plan will be as follows. So once we appear around this area, we'll take a look what's going on. If we'll get the straightforward action right back up to this level, we of course turn to the 4-hour time frame chart, starts considering larger pattern to be formed. Because straight upward action suggests a bit stronger upward reaction. Although I say currently that in the current circumstances, I treat these chances as not as strong as will happen. If everything will be gradual, as it shows on this chart, either gradual upward action here or with the head and shoulders action, that's probably we consider taking short position somewhere around this area. So that's approximately the plan that we have for a coming week. And let's see how it will be realized.